Fantastic. Thanks for joining us, everyone. So we're just going to go over commercial property market, and then we'll throw to a Q&A afterwards. So basically, traditionally, the space of high street lenders, there's a few challenges coming in, and also a lot of opportunities. So I want to start with the brokers, if I can. We want to get a sense of what do you think of the current availability of products in the commercial mortgage space at the moment? Are they fit for purpose? Is there kind of room for improvement, maybe?
Yeah, I think there's definitely room for improvement. I think that's needless to say. It's a more specialist space than the residential market. So I think there's probably a bit of a lack of skill set. So even the challenger banks who offer commercial, I wouldn't exactly say that they are experts in commercial. They have a small niche part of their team that do it. But I think when you lift the bonnet, it's perhaps not as diverse as you would expect it to be. I think there's a bit of a disconnect between what the high street banks want and what clients are able to offer in terms of covenant strength, etc. So the challenges are there to fill that space, but then you come up against issues like lending off of VP rather than investment valuations. So there's so many nuances that make it quite hard from start to finish for the customer journey that I think that there's a lot of work to be done. There's a reasonable amount of lenders operating in the space, but I think it is just that skill set thing. There's a bit of a lack of it.
Danny, would you like to add to that?
I agree. I think the irony is the high streets are more specialist at commercial lending than the actual specialist lenders are. It's almost just an add-on for the specialist world. But high street lending understands the different types of commercials, be it medical basis for GPs, dentists, etc., industrial units that need purchasing. They understand the trading account side of things, all the background information that goes into lending. But I do believe there's a long way to go with innovation in products that high streets offer and commercial lenders offer. It doesn't really go that far. It's a very safe way of lending.
Okay. Not to provoke an argument or anything, but chatting to Andy and Caroline just a moment before we went ahead, on the other end of it, is there enough brokers with the kind of capability and skills to deal with the products and get deals? Obviously, there's a lot more legwork in a commercial deal compared to bridging or even development. Is that sufficient? Is that kind of a factor as well?
Yeah, so I'd pick up, I think, what the two of you said. The commercial mortgage market is an incredibly broad church compared to perhaps a much narrower focus in the residential sector. So you can be talking about commercial lending to any number of sectors. You called out a few, whether it be healthcare, manufacturing, trading businesses, wholesale, you name it. So actually, from a broker perspective, it is definitely more complex. Is there enough skill set out there? So I see an increasing capability amongst the broker community. As the marketplace has developed, as it's become more regulated, no doubt in my mind that there are some brokers out there now who are very skilled in different sectors. What we are seeing is there are some brokerage firms who are focusing on specific sectors. So I've got brokers who will specifically focus on healthcare sectors, so they'll get to know those sectors really well. Equally, I've got others who will focus in on the manufacturing sector, for example. So that skill set is growing, but it is a broad church, so clearly it's a challenge for a lot of brokers to be able to understand the complexities that sit behind any number of different sectors.
Caroline, anything to add there?
It takes a long time for brokerages, especially like yourselves. You've been in the market now for 15 years and you've probably built up the expertise to be able to work in the buy-to-let market as well as in the commercial market. And I think I see some new entrants coming to the market which are excellent brokers working with buy-to-let customers, but then perhaps struggle a little bit when a commercial customer is brought to them because there are nuances about the deal. Every deal is different. The deals need to be structured. They're all bespoke and no two commercial customers are the same. And I think that's probably where lenders can perhaps work with brokers and more predominantly larger broker firms to perhaps educate. And I picked up on something else that Lucy said where you said that there's perhaps a lack of commercial understanding amongst some of the lenders in the marketplace. And it's really interesting to hear the stance on that, because I would certainly take that away. Because I genuinely believe as a lender, I have a very small commercial team, but I pride myself on the experience that that team has. And I think perhaps there's a way to get that information out to the brokers in the marketplace, which perhaps we haven't grasped as well as we should. And that's certainly a takeaway for me.
I think sometimes it's transparency over criteria, making it less of a black art and more of a these are our guidelines, these are our parameters. It's not just guesswork. Don't just send a case in and see what comes back on the update. Being able to have meaningful conversations up front, not filling out reams of forms and systems and good knows what else, and having to wait then for someone to come back maybe a week later with a big list of more questions. You know, this is the deal, this is the property, this is the client. Is that for you? What value are you going to lend off? What kind of covenant do you expect? And I think that transparency is probably what lacks. And when I say that there's perhaps a lack of skill set, it's obviously not, that's not everywhere. It's a generalization. There's a lot of lenders out there who say they do commercial, but actually as you go through the process, perhaps it's not as meaningful as you would think.
So I definitely agree with both of those elements. I think there's a real onus on funders to provide that level of education, that level of transparency. But equally, I think there's also an onus on those funders to engage with brokers to the extent that that shopping list approach, which you've described, doesn't happen. Because actually that's in nobody's interest, and ultimately it's certainly not in the client's interest. So big responsibility. The flip side of that is for the brokers in the audience, oh boy, the opportunity that's out there. There is absolutely a huge opportunity across a wider range of sectors than perhaps many brokers operate in today.
Just on that opportunity, maybe I'll start with you, Danny. Why, it seems to be that the commercial market evolves a little bit more slowly than, say, bridging finance. Why do you think that is the case? Is it because of the complexity?
I think little is understated, to be fair. It comes down to two factors, whether you're dealing within the specialist arena, whether the challenger banks or actual high street banks, because both operate very, very differently. It does come a lot down to also the broker spread as regard to, as master brokers, we'll see a lot of cases come to us where we do have the expertise, but the broker doesn't. So when it comes to the actual commercial market actually evolving, it's stunted at the very, very start due to obviously the case for input, but also, unless there's going to be more innovation, which there isn't, as regard to lending on the commercial spaces, be it to SMEs, more funding for SMEs, in all manner of things, more variety on what you're allowed to do with the property, what lenders are allowed to do, the proper criteria, it's always going to be very, very slow. I mean, commercial assets, although it is a slower market, it's a lot safer market, I think, to actually lending than a residential. It's not as directly impacted massively by the political climate that we're actually in. On the basis it's been there forever and a day. Unfortunately, obviously, what we might start seeing over the next few years now with the high street decline is more and more shop front property becoming residential side of things. Oxford Street's going to look a really great place, I think, in 15 years. But it's hard to say really why it's so much slower, but I do think it's stunted from a lender's point of view without getting, from our point of view, broker's point of view, to a lender without being cocky.
Right.
So I would say that they've had it good for so long that it stayed that way. In a view. So, lending to 60% loan to value based upon very, very strict criteria in the commercial world is easy because you can't walk off the high street and get anywhere else. Lots of lenders also, we do have an obvious issue with lots of lenders also, big high street names, you can spend 3 months, this is akin to the point we made earlier on, 3 months getting to an application for lending to be basically withdrawn. So that's never going to help a commercial market progress.
And from the lending perspective, maybe Caroline, do you want to pick up on that?
Yeah, I think I have a slightly different spin on it. I actually perceive that the commercial lending market has greater risk because of the long-term nature of the loans that we give out there. When you're lending to somebody for 15, 20 plus years, it has a more inherent risk because we don't have that crystal ball into the future, rather than lending for somebody to, 6 to 12 to 18 months. So I do think that lenders have to take a lot more time over the products that they launch to market, how they are ultimately going to work, not just in the short term, but in the long term too, and how they're going to react to a changing market, and how those risk metrics built into those products are going to impact not just the customer going forward, but the bank as well. We're reportable institutions, and we need to make sure that everything we do has the best interests of the customer in mind. So I do think that when we create new products, they are an awful lot slower to bring to market. And there are lots and lots of products on the market. Granted, I agree with you on that, but I do think that they do take a lot longer to come together.
You're absolutely right in that sense, but what I would argue is lots of commercial lending nowadays may well be amortised over 20 to 30 years, but a lot of lenders now are actually just doing 5-year terms on commercial deals. So this risk thing, as much as it might be bespoke to a certain lender, the high streets themselves, residential doesn't just mean obviously short term, it could mean longer term buy-to-lets, it could mean residential property. The great thing about commercial asset normally is the yield that it holds, and also it's a value that it sustains. You don't really see those declining values that you see in residential properties. So on the basis that you amortise a loan over 25 years, but your term of that deal is only 5, where is your risk?
Yeah, I have a slightly different view altogether, actually. I think that there's less lenders keen to play in that space because I sort of disagree on the values. I think that there is more volatility in values because you're sensitive to unemployment, you're sensitive to business risk in a recession. You've got companies that perhaps don't withstand more troubled economic times, then tenancies disappear, you then have serviceability issues, that impacts valuation, and I think the swings in valuations are larger in the commercial space than they are in the residential space. And I'm sure, having lent through probably some slightly harder times, you'll be able to answer to that, to say, actually, yeah, we saw a lot of troubled commercial customers versus residential. Okay, we did see things drop, and don't get me wrong, it struggled, but not quite the same volatility as in the commercial space. Therefore, I think lenders fear it. They're less inclined to rush into the market, which means there's less competition, there's less froth in the market, whereas in the residential space, everyone's competing for the same business. So rates are lower, products are coming out left, right, and centre, whereas I think commercial just moves at a slower and steadier pace. I would like to see it different, but you have to be reasonable and sort of understand the market and the reasons why that's not the case, I suppose.
Right, so moving on, if we may, lots to talk about there. Earlier this year, the average difference between estimated and actual valuations in the commercial property market was said to be in the region of about 10%. So how does this impact lenders, brokers as well, but firstly lenders, and is there a remedy for this pretty large discrepancy? Do you want to start us, Sandy? Yeah.
So I'm not sure as a lender I'm necessarily the best qualified to answer that particular question, but what I would say is yes, we do see differences, but we need to rely upon the professional expertise of those who are specialists in the sector. But it kind of plays back to a comment earlier here around how sectors can change and how they can change really quite rapidly. So, a classic example at the moment would clearly be the retail sector. And the impact of what we are seeing in the wider economy in terms of that move away from the high street, and you only have to walk down any high street to see the number of voids that are out there at the moment. By definition, that is bound to impact the values element. So that's a long-term play. I think you are always going to see a differential. But nevertheless, you've got to be able to respond to different sectors. But it will definitely be very much, each deal on its own merits. Comes back to the complexity piece. I wouldn't argue that you take a blanket approach, and certainly from a Lloyd's perspective, there would be a balance in terms of what we understand in terms of that differential. Is there a rational explanation for it? What do we see strategically happening in that sector over a period of time? Do we see that differential narrowing, or do we see it potentially widening as well?
At Aldermore, how's that kind of seen and received?
Yeah, so I think sometimes when a customer comes to you, they've got a property, they say the value is £100,000, and that's their assumption of value. And then as a lender or a broker, we accept that. And sometimes maybe we accept that opinion of value blindly, and I think that's where perhaps it's incumbent on all of us to maybe sanity check those figures a little bit. There's tools in the marketplace that we can use, Rightmove, Zoopla, any other tables that have these values, and I think maybe we just need to have a look at that before we start spending customers' money on valuations, because sometimes that differential is blindingly more than 10%, and I think we can sort of look to prevent a little bit of that, but then once the deals go in life, I mean, you mentioned retail. I mean, we've seen some yields move out by 6%, and that's monstrous in the last 12-month period. But that's after a deal's gone live. That deal's already happened, and I think we are talking about just new deals that we take on at the moment. So, yeah.
What kind of implications is that having for brokers potentially?
Well, I think any property lending is going to be sensitive to valuations, whether it's residential or commercial. Again, commercial's more specialist. Valuations are subjective. The customer always thinks their property is the best property within 3 miles. The valuer thinks it's the same as another one down the road that sold 2 months ago. So it's, I suppose, an ongoing challenge. And like in every profession, you get good, you get bad, you get everything in between. And it's one of those things I think you just have to accept. And if you have valuers that both lenders and brokers like working with because they're reasonably sensible, they explain their rationale, they don't get pig-headed if they put pen to paper and actually you bring something to them that changes an opinion. It's just one of those things you can't control, but it's always frustrating because, like you say, you accept it on face value, you go all the way down the line, and sometimes you're actually at the stage that once that valuation comes in, the offer's good to go. So you've put so much work into it. Right. And if you're already sort of on the borders, top loan to value, that's it. It can be the difference between the deal happening or not happening. And then you do also see it where then the customer is completely frustrated with you and the lender, even though actually it's no fault of either of ours. They might go to another broker or another lender, get another valuation done, and it comes back different, and it sort of cements their view that we haven't done our job properly. But ultimately, like Andy said, you are beholden to the professionals, and that will never change, and it's just one of those things you have to work through.
I think it's also hugely important from a client perspective, because a lot of these deals, these purchases, will probably be the biggest investment that client is actually making at any one time. So in the same way that, you know, equally if we are personally buying a property or something like that, yes, clearly you want to know what the value is, whether somebody's going to build a motorway through it in the next 6 months. We've actually got a huge responsibility to the client. But I get the point, you will get variations and it can cause frustration.
Well, anything before we move on, Danny? You want to add to that?
The problem with commercial valuations is, you know, you can't go to Zoopla, you can't go to Rightmove. You know, it depends strictly upon the asset. These are not sales figures out there. What the client, you know, what's actually the asset does, what the client wants to do with the asset as well, as regard to how it's actually valued. I mean, an industrial unit might have a bricks and mortar value of £500,000, but its trading worth could be 2. So, and again, you know, when we're talking about vacant possessions as opposed to investment values, clients don't really understand all that side of things. Most clients, I would say, in the commercial world, and I come back to the point you were making earlier on, are probably more astute than the average Joe's going to go and buy a residential property. So they're a little bit more clued up. It doesn't stop the frustrations with the values they perceive it's worth. But again, on a purchase basis, they're only going to give you a value of what they think it's worth based on what they've seen around the local area, if they're obviously buying it. So, but that doesn't necessarily ring true with regard to, you know, a restaurant on Baker Street, for argument's sake, is going to have a completely different value to the same size premises that might be a paperclip shop, for argument's sake, whatever they're called nowadays, as regard to a value that a value's going to put them at lease. All those things play a part. So it's impossible for us to actually know when we go in, and we'd love to be, you know, there'll be a magic formula where we could get an idea of valuation to save probably 6 to 7 weeks in a commercial application before you get an evaluation back. It's been underwritten and everything else. That's one of the last things that's actually coming back to be done for the deal to be scuppered, for argument's sake, based on the value given. Now, to be fair, within the valuation community, so commercial community, we are playing at lower loan to values than you would in a residential market. So you can take that slight hit, but if an application is dependent upon getting or trying to achieve that 60% loan to value, for argument's sake, a down valuation of 10% is likely to kill it because it's very expensive.
So moving on, if we can, potentially controversial question, but general election on the horizon. How are you guys talking to your clients, borrowers, how's that potentially going to change things, restructure things, maybe eliminate some opportunities, maybe create some more potentially? What are your thoughts there? Who wants to pick that up first? I'll let you guys take it.
I think most of the brokers I spoke to, clients I speak to, if I'm honest, are actually sick to the back teeth to it and don't want to talk about it. The other thing is, what is there to talk about? You can plan so much, but unfortunately there's still so much unknown. It's taken so long to get nowhere, actually probably go backwards, that I think the market can only react. I don't think it can be proactive in what's going to go forward. I mean, yes, you can try and shore things up, but all it's going to do is delay people's decisions because no one's got a crystal ball. What can you say? What can you decide? I mean, the banks themselves will have an idea, you get contingency plans. Clients aren't that sophisticated, brokers aren't that sophisticated. There's not a lot we can advise based upon what we don't know.
Right. What's happening at the lenders, at the banks?
Well, I think we just all have to be mindful that there's opportunity in whatever the market's doing, and especially when we work very closely with our brokers, we will pick up on whatever that current opportunity is at that point in time. So, if perhaps rates move up, move down, whatever, who knows what's going to happen? None of us have that crystal ball, but we will react to the market, we will move on. Certainly as a lender, we're here to lend on commercial real estate, so that's what we do. So we have to find a way forward. But it is a little bit
Is there any
of the
particular
unknown.
things that you kind of got your eye on, like if this happens, it's going to equal X, Y, Z? I'm not sure, but...
So I think if I look at what we would have done with our existing clients, clearly they're up, and I am desperate not to mention the B word, so I'm not going to, but you get where I'm coming from. We've done a lot of scenario planning with tens of thousands of clients around if this were a particular outcome, if that were a particular outcome, what might the impact be on your businesses? Because I think there was certainly quite a wide range of preparedness across the SME market space. So we've done a huge amount of work. You can't be finite about it because you don't know what the answer is. Yeah, but the best that you can do is to be able to prepare clients as far as is humanly possible. But I do agree on the point around this whole potentially flattening of demand when there's a period of uncertainty. I think some of that uncertainty is lifting. Certainly, we published a report earlier this week which showed that kind of business optimism had risen slightly between September and October. It's still well below the long-term average, though. And there will undoubtedly be people out there who are delaying long-term investment decisions in terms of how they're going to take their businesses forward. That said, the counterside to that is at some point that will create huge opportunity both for the broker community and also the funder community as well.
Okay, last question before we throw to questions in the audience. So, investor diversification is predicted to positively impact the commercial mortgage market. So how can brokers spot these opportunities and help borrowers leap and basically get yield-bearing investments? Do you want to start us, Lucy?
Yeah, I mean, we're not there to advise our customers on what they should invest in is the first thing I would say. So we would never say to a customer, have you thought about investing in commercial? That's just not what we should or do. So we have conversations with them like you would expect. You catch up with them, you find out what's on their mind, what they're looking at, and certainly the sense is that people are looking for alternative methods of yield because clearly the buy-to-let space, I mean, we won't get onto that because that's a whole nother topic, but the yields just aren't there anymore. So people are looking to be a bit more creative, whether that be kind of larger HMOs, student lets that fall sort of into the commercial remit, albeit they're not commercial assets, and then semi-commercial as well. So I think it's certainly not for us to direct people to go out looking for it, but we're certainly noticing people come to us more with those conversations, asking us about funding if they wanted to go out and buy a commercial property, asking about the parameters. So we can do a bit of educating there just to help point them in the right direction, I suppose, for what lenders like to see in order to achieve the best funding package. So that's probably where we come in, certainly.
Yeah, I mean, I would agree with that. I mean, it's difficult to try and ask someone to go and buy a commercial. You need to understand what the commercial asset is. If the borrower doesn't understand the commercial asset, then you're not going to ask them to go and take a leap into buying a different type of property. Plus, also from a lender's point of view, experience is key in anything they do with underwriting commercial loans. I think the only come back to the point Lucy made, the only thing you're looking at really on the commercial side, if a property client wants to go and buy a commercial building, you're looking at PD, I think, more than anything else, if they're looking to convert something, as opposed to actually buying a commercial asset as an investment or a trading entity.
Right. Anything to add before we throw to the audience?
I'll just add one thing, which is I'll kind of get a slightly different dimension, but I think Lucy raises a really, really important point. So you talk about, as a broker, relationship managing your clients. That's the opportunity that is out there in the marketplace.
Okay.
I will still see a wide range of broker strategies around their existing client base, ranging from the full relationship management offering, being involved with them on a continuous and a continual basis, versus some brokers who are still there purely for a transaction, if you like. And I think for the audience in the room, that's the opportunity. Yeah, because actually, if you relationship manage that client over a period of time, you get to understand what their vision is for their business, their strategy on an ongoing basis. That's where the opportunity is created.
Right. Last statement, Caroline?
Yeah, I think understanding the motivation is absolutely key as to why somebody wants to diversify into other markets. You talked about shifting yields, etc., which is great, but we've got to understand capability and ability. Asset management in the commercial sector is massively different to that in the buy-to-let sector. I think people need to understand their capabilities and abilities,
right,
and sort of small steps maybe in some instances. You can't go from just managing a buy-to-let portfolio to say, right, I'm going to now spend 5 million on the next, multi-let unit that I come across. It's apples and pears. I think you've got to be mindful of that.
Great. All right. Very interesting stuff. Do we have a mic that we can run out? Is there any questions for anyone specifically, or just for the panel as a whole? Is there anything you guys would like to add that we haven't touched on? Obviously, a massive area, lot we didn't cover just by the virtue of it's a massive area and short amount of time.
So I guess the final point I'd make, and I'm going to make this from the perspective of an SME client rather than from a funder, because it came up in the previous session around in future, will funders go more direct versus will they go through brokers? What our clients are telling us is that the experiences that they have within their personal lives, where frankly, let's be honest about it, everybody does everything through one of those. Those experiences of immediacy, of transparency, of clarity, of ease, of organising their own personal finances, or even making a purchase, we're seeing that really start to bleed into the way in which they run their businesses. So for the brokers in the room, that for me creates a huge opportunity. We live in an intermediated world. We don't always recognise that we live in an intermediated world, but I remind myself whenever I'm ordering something off Amazon, or for that matter ordering an Uber, that effectively they are brokers. That is the way of the future and the way of the world. So I think there's a big reassurance in there from me for brokers in the room that actually, as a community, as funders grow, you've only got to look outside there to see the number that are out there. I think brokers have a fundamental role to play, in the future of commercial finance.
Nice look to the future as a final statement. Thanks for coming, guys. Really appreciate you guys taking the time out to inform us and share your wisdom and knowledge. Just a personal note to the audience, I'm a reporter with Bridging Commercial, so if there's any commercial brokers or lenders in the audience that maybe have some stories or some things that they could discuss with me, make yourself known, come up, maybe give me your business card. Always looking for good stories. Thanks for coming. That wraps it all up.